Touchstone Exploration Inc. Okay, txp, Toronto Stock Exchange. Look at this guy go. All right. Let's zoom in the base. Whoa. That's so awesome. All right. What do we have? Let's start by identifying my monthly defined support. And let's start by identifying my monthly defined resistance. That's the upper pattern. Remember, pattern within patterns. And check it out. Whoa. All right, there we go. So I have this pattern right here, launching pattern, monthly candles. Remember, 1, 2, 3, 4, 5, 6, 7, 8 months, which is part of this bigger pattern here from 27 cents to 14 cents. And eventually this price probably going to go hit the 35 cents, and that's going to make that ultimate biggest pattern. So the last line of defense for that breakout is that 35 cents right here. Going to give target added to the breakout line. And you see this target here. Going to get us about to that level. And this pattern right here. It's going to go right through here. So this shorter term pattern, more probable of reaching its possible target. It's in line with this important resistance right here, 34. And the target for this pattern here runs right through it all the way to 40 cents. But if you be careful, sometimes when I look at it, I see that, well, look, Pat, there's a resistance coming up here. Either I'm not looking at the correct pattern, the closer pattern to the breakout line, giving that shorter target. Or if I didn't have that pattern here, I'd really have to adjust my target, really lower it. Look, you want to be on the right side of that resistance. Every time you hit that resistance, could have more pullbacks, stay in the trade longer than you have to, land emotional landmines. These are monthly candles, so you want to stay in the trade the least long possible. And you don't want to have the price action starting to go back down just because there was some resistance here and you put your sell stop up here. It just doesn't make sense. You get off here right before the train. If it goes through, and then don't panic if you don't profit from that delta, but then you wait until it consolidates, and then you get another takeoff pattern right there. And that's part of Stan's system. Also, the continuation breakouts, continuation buys. So you have a breakout, you have pullbacks, and sometimes the price action is going to move sideways until it reaches pretty much a 30-week moving average. And then after that, if it breaks out again with good volume, then you're back in. You want to stay in the trade when it has the momentum, when it rides hard and fast. And when it goes sideways, you're just losing your time and just risking landing on emotional landmines or the price reverting and going back down and triggering you out. So that's how I do it on my classic chart trading framework. I know I have a breaking out right now. And take it out. Remove that. I just want to close. We have to remember this is monthly candles, and for this to be valid, you want to close above that super duper 27 cents line right there. If you don't get it, this could be just a wick right there. Ooh, remember, it could just suck back in and close below 27, and then you're trapped. Doesn't mean the price action is not going to continue upwards eventually, but it could go sideways for a while here, and you should be in a stock that's confirmed breaking out. And the monthly candle trend is ultra powerful. Okay, 27 cents level to look out for. Let's zoom in on the weekly chart and apply Stan Weinstein. What do we have here? Whoa, look at this one. Breakout. Always go look at the volume. Breakout RSI. not the Mansfield, but classic RSI going up. And you guys, you know how it is. Tell me what's wrong with this picture. Well, you have the close above the resistance right here. 30-week moving average going up. Is that, look at Ichimoku cloud, all that overhead resistance. You barely closed above. I would have liked to have more consolidation pattern around the 20 and then break out. So, but it's still a good sign. Remember, the stock needs to move 40-50% easy before you getting in. Make sure that 30-week average is going really up in your favor. And how the volume react. Kept going up. And we have contracting volume on the candles down. Oh, except this one. Yeah, it went down. Volume green going up. And contracting volume on the way down. That's the way you want it. So it went up, back, 30-week moving average. Wasn't just ready yet, but look at that. It's forming. This is our 27 level. Remember this on the monthly. This is the noise. This is the breakout candle this week above the 27. And, well, right now it's not noise, but it could become noise, right? I did these crosses here. If the monthly close, if the next weekly candle is like below here, that's just going to be the wick for that month, for May. So you got to be careful with that. Wait. Don't get greedy. What else do we have? We have... Oh, what's the volume here? I want to get rid of... Yeah, these big candles are skewing. Okay. So look at that. That's about over 500K volume. 200, less than 100. So we have twice the average volume of the previous 4 to 5 weeks right here on this candle, and we're just this is Tuesday's close. So guys, it's looking you have the volume. It looks really like a nice breakout candle on the weekly, guys. I like this TXP. So how am I gonna play this? Well, here's the pattern. Sell stop investors all the way down here, right below that wick. You enter here. That's your risk. From top, from 27, or no, where's this one? Close 29.50 all the way down here. Don't lose more than 1% of your NAV. If you're in traders, you could put the price. You could put it right here below maybe that wick or below 30-week moving average. But remember, a few episodes back, I did I think it's just a post I did on the Twitter showing Chuis, CHUIs. And it just had a nice breakout like this. But the next week, it had a candle that went like that. It sucked all the way back in, triggered. If you would have been a traders, you would have been out. Investors, you would have been safe, then go back down. The price action went all the way back up. So you got to be the trader's initial sell stop. I don't like doing it too much. I'd rather have a smaller position size. And what happens is, remember, most of the time, after 1 to 3 months, after a breakout, you'll have you have some candles. Price action going to go back down. And if it's on low volume, small candles, you get another chance. It's a good sign. It's a healthy pullback. Another chance to get back in. And then you'll get even better risk to reward. So you'll be able to get in right down here, close to the breakout level. You could still put your sell stop down here. And then you could move. You have a more position size and lower risk because you have a healthy pullback. Higher probabilities of the trade going your way. What else I have to look at? There's nothing on the Ichimoku cloud. It's all underneath. And the RSI is going... It's already above halfway point going upwards. Guys, looking good. I just want a monthly close above 27 cents. I don't mind waiting. If I have to buy it 31, 32, 33 cents, I'll get in. And I'll just position size accordingly, guys. Remember, risk, money, management, super important. And also added emotion. Not knowing what to expect is going to lower your emotion reactions. You'll be able to react in an analytical way, in a precise way. And it's all good, guys. Don't get greedy. Know that if you miss out on this initial breakout, don't worry. It's better to wait for the sand system is great. You have pullbacks on low volume, confirming even the stage 2 further. So there's like no incentive to, unless you're afraid to miss out on a pure breakout which never pulls back. I like the pullbacks actually because it makes me a point, makes me a bottom, a pullback, and makes a point for an eventual to start drawing my trend line. Because remember, you need trend lines for exits. They're like almost the best exits close to the tops. It's like that trend line violation that has on the fourth break of it. Let's say 1, 2, 3, fourth, you're out. So if it just breaks away straight in a parabolic, you're gonna have to wait a few more candles before you get a pullback, and then you're able to draw that trend line going up. Wait. Find a way to wait. Wait. Guys, 27 cents. Come back when the monthly close is above that. All right, man. TXP. Looking great. Ciao.